All right, good evening, everyone, and welcome to our live session tonight. I'm so happy to have you here again tonight. All right, so quickly, without wasting time, we talked about important things tonight, like the trading platform, what we trade on, and how Forex transaction works. So I'm going to take time to explain this to you guys. For the trading platform, we have a lot of them. We have MT4, we have MT5, we have iTrader, we have other trading platforms online, but the one people use mostly, the ones we use mostly are trading view for analysis. And then because in Nigeria, brokers we cannot really link them to trading view, so we only use that for analysis, which is the application you're seeing right now. All right, so we use TradingView for application. We use MT4 and MT5 to execute the trades. For iTraders, we don't really want to use that because the features they give, and most times they are online. You may not be able to download the app to your phone. Most of the phones we have do not support the iTrader app. All right, so we will just stick to MT4 and MT5. Like I said, for those who are using iPhone who are unable to download the MT4 and MT5 application, do not worry. A solution is coming for that. That is due to the war between United States and Russia. The app is somehow part of the application is designed by the Russian people, and the iOS is owned by the United States. Like the major part of the iOS is owned by United States. That's why they decided to remove the app. So that's it. But solutions, we have many ways, all right, to just bypass that. So don't worry about that. Okay, so I actually dropped a video on how to use MT4 application. You need to download that and watch. All right. You need to download that and watch because I took time on that to do the screen recording. I had to show you guys some stuff, how to use the application and the rest of the thing, even the trading view application. But if you are using your laptop to trade, you will want to get the trading view application on your laptop, all right, which is what will look like this. And the tools you really need, all right, the important tools are the trend line, you need arrow line, you need the rectangle, you need short position and long position. That one we'll talk about it when we get to pips and pips calculation. I will go back to how to use trading view so that I'll show you guys how to use trading view to calculate pips automatically, so you don't have to do the manual calculation stuff. All right, this is computer age, so a lot of things don't really stress people anymore. All right, so that's it. So the tools you need here, like I said, on this app, once you go to the website tradingview.com on your laptop, there is an app now. I think there is an application you can download, but I like using the website directly because it refreshes quickly. Like it's quicker than the application. So I use the website tradingview.com. I bookmark it, that when I open my system, I can just tap on it and it opens the website for me. All right, so that's it. Where you can find these tools, I added them to my favorite. That's why you're seeing them here like this. They are all here. All right, all the tools are here. If you want to draw, you just need to pick the tool, make your drawing. All right, when we get to how to make analysis, I will show you these things. I will teach you things when we need them. That's why I'm telling you guys to keep following. I see some people trying to ask questions in the morning, beyond the phase we are right now. Guys, don't worry. I'll teach you literally everything in this class. All right. This is not the first time I've done this before, and I can promise you that this is one of the best classes. All right. You will attend. All right. Okay. Can you guys hear me? I think some people say they can't hear me. Can you guys hear me? Drop a message. Let me know if you can hear me. Can you guys hear me? Okay, okay. All right, guys. Okay, so concerning what is traded on in the forex market, clearly we trade on currencies. All right, we trade on currencies. I made mention of that yesterday, that some countries currencies are not tradable, like the Nigerian naira. Unfortunately, we cannot trade the Nigerian naira because the way the chart looks, you cannot analyze and trade that. I think if the Nigerian naira was tradable, it would have been a source of income. So we, the traders, because you can actually just predict what will happen in Nigeria now. This is our country. We can just predict what will happen in Nigeria. The next thing it happens, film. It will affect our Nigerian currency, which either make it or appreciate, right? Well, we make money out of that. So that's it. That's how it happens. But unfortunately, we don't trade Nigerian naira. So we trade other currencies. Okay, so the major ones are the pairs with US dollars, like euro and US dollars. We have the European currency paid with the United States dollars. Then we have something like pounds paid with the United States dollars. We have Australian dollars paid with United States dollars. We have New Zealand dollars paid with the United States. A lot of currencies are being paid with the United States dollars. Someone asked in the morning if we could actually choose a currency we want to pay with, which currency. Unfortunately, you can't do that. All right, you can't actually choose which currency you want to pay. We just have the currencies paid together already for us. We just need to choose which one we want to analyze. Then we do the analysis and take the trade. All right, analysis is the core thing in forex trading. It is what determines whether you make profit or you lose money. All right, so that's it. So I'm going to take my time to teach you guys how to analyze the forex market when we get there. All right, so so that's it about what is traded on. We have currencies. I explained a little bit yesterday that we have two currencies paid together. I made mention of talk of war, which is stuff that the man of war do in school and college. When you go for NYSC, you see stuff like that, where we have, all right, we have this to be the center. Then we have a rope connected to both sides. All right, we have a rope to this side. We have a rope to this side. We have people's here. All right, we have people here. We have people on this side as well. Now, where this rope goes, all right, let's say we have something in the middle, all right, which is the market price. All right, so these two are going to drag the market price. Where the market goes is determined by the strength, all right, by the strength of the currency. What I mean by strength is their profitability, their worth, all right, their net worth, all right, what their currencies are worth, and all that. That's what determines whether the market goes towards their direction. All right, let's say we have which currency should I? Let me use euro and US dollars. Okay, we have euro. All right, we have euro. Yeah, then we have the United States dollars on this side. Now, this represents countries using the European currency. All right, so this represents them. All right, then this can you guys hear me? All right, they say someone says it's not clear. Can you guys hear me? Okay, okay. Some people say it's cracking. It could be your network because I'm actually monitoring the sound, and the sound is clear here. But I'll keep checking. If you guys don't, if it's not clear, you let me know. All right, I can change the network if it's from me. Okay, so like I said, we have the European currency. We have European currency pattern on this side. Then we have the US dollars. Now, this represents currencies, countries using the European currency. There's here represents United States. All right. Like I said yesterday, activity of a country is what determines the worth of their currency. All right. US dollars appreciating means that the United States must have made a lot of money. All right. They are in, okay, guys. So if it depreciates, it means they must have lost some money and stuff like that. It's just like the real human, all right? There's a way you booga when money is in your pocket, and there's a way you walk when you don't have enough cash like that. So you are always careful during that period, and anybody can just see that as an opportunity to talk to you anyhow because it feels you don't have enough money in your pocket and stuff like that. So that is what happens in the forex market. Euro can drag the United States dollars to its direction because it knows that the United States dollars is weak. All right. United States dollars can drag the euro to its direction because it knows euro is weak. Reason being that is either they have lost money to some investment or they must have lost a valuable person. Let me tell you, another thing that determines the worth of a country can be the people they have inside their country. Like we have Dangote in Nigeria, we have a lot of rich people in Nigeria that are popular. All right. These people now can actually make outsiders like foreigners to trust us, all right, and come into Nigeria to invest. So let's say unfortunately like this is not going to happen, we lose someone valuable like that, someone let's say someone popular and rich in Nigeria, that is somehow going to affect our net worth because people that are supposed to come into Nigeria to invest, they may choose not to come in because they feel we don't have people we can trust, we don't have reasonable people, all right, in Nigeria that we can like trustworthy. When you have money, they feel you are trustworthy. That's life. So that's it. That's another thing that can affect the currency and its fluctuation, which has to do with appreciation and depreciation. So that is it. That's why I had to bring up the talk of war thing so you can understand. But then in the forex market, it is not like this. Let's say the talk of war is turned to the horizontal direction. All right. Okay, let's say this talk of war is not in this format. All right. The one we have in the forex market is kind of like this. All right, it's kind of like this because we expect market to go up and down. Now, let me tell you something. We are not interested in the sideways movement of the market. We are only interested in the upward and downward movement of the market because we actually make money when market goes up. We also make money when market comes down. All right. Why that is possible is because market can be taken to any direction, all right, based on who has strength. Like these two currencies that are paid together share equal rights, all right, they have equal starting points, which means the profitability or maybe losses, everything is determined later, all right, not from the starting points. You cannot determine where market will go at a starting point. All right. Somehow it's like life. You may not be able to determine what you will become, all right, later in the future. So that's how forex market is because the market has this kind of human behavior. In fact, it behaves like human because we humans are the forces driving the market. All right. When we spend our money, when we spend our money, it's appreciates, it makes our worth to appreciate. That's why if we have rich people spending their money in Nigeria, definitely our network is going to appreciate. But the thing is that when we make money in Nigeria, we go outside the country to spend this money, and this somehow affects our net worth. All right. That means we are hustling, making money from people in Nigeria, but we are spending the money in another country, like we are making others rich. Do you guys get my point? Like we are making others to be rich while we here, all right, while we here are not making that much money, all right. So that's it. That affects our currency. So the talk of war here is like this. Let's use that euro and USD again. We have euro here, Then we have US dollars on the downward side. Now, the strength of euro is to push the market to the upward side, while the strength of the US dollars is to drag the market to the downward side. That's how it is. If you check this chart right now, we call this chart. This is chart, CHART, chart. All right. This is the black line you're seeing right now from the left hand side of the screen to the right hand side of the screen is showing you the current market price. This is why I said that we traders, we can actually tell you the actual price, all right, the actual exchange rate, which will be more accurate than what you see on Google. Google updates from time to time, but we, like, Google can wait for 24 hours to update an exchange rate, but here you see everything every millisecond. It moves, right? It ticks every time, right? That's how it is. It moves every second. It changes. So the price doesn't remain the same. The exchange rate doesn't remain the same, right? So this is the current market price. This is the current market price. The currency paid here is the US, which is Australian dollars paid with United States dollars. All right. When you download that video on how to use MT4, you will see some of these things there. All right. So here is the current market price. Now from here, market can actually move to the upward side. It can also move to the downward side. What determines which direction it moves to is the strength and weakness of the base or quote currency. I made mention of base and quote currency. Quote currency is the currency on the right, all right? Like this AUD USD, AUD USD right now. USD is the quote currency, while the currency on the left, which is AUD in this case, is the base currency. BASE, that is the base currency. The one on the right is the quote currency, that's US dollars. So US dollars has the downward movement of the market. If market goes downward, all right, the market moves to the downward side, it means the strength of USD must have increased. If market moves to the upward side, it means the strength of AUD must have increased. Then if market moves to the upward side, also it can be that the US dollars is weak, because when US dollars is weak, AUD will automatically take the lead. Same thing applicable to when AUD is weak, US dollars take the lead automatically. That's what happened. They are fighting at all time. Though this fight actually, this is part of practical definition of forex. This fight doesn't actually happen in real life. It only happens here on chat. US, the US, all right, the United States is not interested in battling with Australia, all right. So they don't care about what Australians are doing and all that stuff. But we traders, we are the one comparing the two, trying to make them fight unnecessarily so that we can use their money, the money that the United States use and the money that Australia use. We can use that. We can use this one to buy this one because we think this one will appreciate. We exchange this to this. When it appreciates, we sell them out and stuff like that. Well, I'll talk about that when we get to how forex market is traded. All right, how forex transaction works. I'll talk about that there. So I was explaining about the currencies, what we are trading, and how they get to move the forex market. So that's it, guys, for how forex transaction works, which is how we actually make money from trading. I think this will be more interesting than any other thing. All right. So guys, we'll give you 1 minute so you can adjust your mic, adjust your network, make sure everything is set. Then we come back to it. All right. See you in 1 minute. Okay, welcome back, guys. I gave you that opportunity so you can adjust your network and everything. All right, so now let's get to how forex transaction works. Now, this is one of the most interesting part of forex trading. All right, because this is where you get to learn how traders actually make money from trading. You may see people saying, "I'm trading forex. I'm trading forex. We are trading on currencies." Yes, we know. How is profit actually made? How are you trading on currencies? How are you making profit from trading currencies that you don't have? All right. So this is it. I'm going to make this as detailed as possible, all right, so that you can understand it clearly, all right. Now, this is it. I like using real life stuff to explain things to people. Now, let's say you are a trader, especially the Igbos, market men and market women. I see you guys in this class. Okay, let's say you are a trader, you sell stuff, then you have a capital, all right? Let's say you have a capital of, should I say, 1 million naira, all right? 1 million, you want to start a business with 1 million naira. Now, what traders do is this: they don't want to put in all the money in one line of business. Maybe they want to sell clothings and stuff like that. They may want to sell shoes, bag, clothes, comprises of something including jeans, cap, shirts, polo, and the rest of the thing. Now, let's say they want to sell just two of that. Let me just say jean and polo. All right. So they buy jeans that is worth, they buy jeans that is worth 500,000. All right. 500K. Then they buy polo that is worth 500,000 as well. Now, there's what we call analysis in the forex market. We have technical and fundamental analysis. These are the things I will take time to teach you, because that's what will help you know where market is going, whether market is going up at the moment or coming down, whether market is about to go up or is about to come down. That is the usefulness of technical and fundamental analysis. All right. So let's say they buy jean worth 500,000 and polo worth 500,000. They have this in stock. All right. They have this in stock. And when they reanalyze, all right, after the analysis can be asking questions, making findings, checking your expenses, and so many things. As a trader, there are so many things you can do, all right, to analyze your profit, to analyze what your business will look like later in the future, all right. So that's what analysis is. After the analysis, they find out that the worth of the jeans they have in stock is going to depreciate. What I mean by depreciating is it will lose value, all right. So what they will do is they quickly sell the jeans out, add that money, all right, to buy more of polos, because after the analysis, they realize that jean will depreciate while the polo will appreciate, all right. They will sell this jean out. Let's say everything they have is worth 600,000 with the profit, all right. So they sell the jeans out, they make profit of 600,000. They add it to the 500,000 that the jean is worth, sorry, that the polo is worth, buy more of polo, all right. They buy more of polo and add now they have two times, they have at least two times of what they had before in stock. That is polo, all right. So they will keep these polos. When the polos appreciate, they sell them out. It's just like people doing that with fuel now. They bought fuel at low cost, keep them, like they close. Sometimes people close when there is fuel scarcity, because they believe it will keep happening like that, so that they can sell later in the future at a very expensive price and make even more profit, all right. This is what happens. This is what happens too. There is a time you want to buy something in bulk, they look at you and be like, this one will not buy that much. So they don't sell it to you, they keep it, because the cost of that thing is appreciating, and they sell it to a bigger customer later in the future, and they make even more profit. People do that, they keep their stocks because they know it will appreciate, and they sell them later. So this person adds money to buy more of the polos, all right. When the polo appreciates now, he sells them with the profit made from the polo, and the money from the jean, profit made from the money he used, that he sold the jean to buy. That will give him double or triple the amount he was supposed to make. That's it about it in real life. That's how it is in real life. Now, coming to forex, all right. Coming to forex, this is what happens when you deposit money to your trading account. I'm going to show you guys to open a line account, how to deposit, how to withdraw. the same way I will teach you guys how to actually profitably trade the forex market. So what happens is this: when you deposit money to your trading account, you have what it takes to trade any currency pair at all you want to trade. All right. So you don't need to have these currencies, because this sounds like a question someone would possibly want to ask. Do I need United States dollars to trade the US dollars? Do I need Canadian dollar to trade Canadian dollars? No, you don't. Once you deposit your naira to the forex broker, it will reflect in US dollars. And US dollar is like a universal currency that it's used almost everywhere in the world. The world recognizes US dollars a lot, so they use it literally everywhere. So when you deposit in naira, when you deposit naira, it will reflect in US dollars. You can trade any pay. Now, let's say Australian dollars, all right, is paid with the United States dollars. So we have AUD, USD. Now, your capital is let me just, how much should I even use? How much should I use? How much should I use? Uh, can you guys hear me? I see some people complaining. Can you guys hear me? Okay. Okay, guys. I think maybe some people are having issues with network. Okay. I was explaining how forex transaction works, how people actually make money trading these currencies. All right. So this is it. When you deposit your money, when you deposit your Nigerian naira to a forex broker, it reflects in United States dollars. All right. It reflects in United States dollars, and I'm trying to be sure you guys can hear me clearly. Can you guys hear me loud and clear? Okay. I will keep the chat open so that I can monitor the activity. When you can't hear me, you let me know, because I have to be sure. All right. So someone was asking at what rate. It depends on the broker you're using. All right. Depends on the broker you're using. Deposit rate. That's why I said that this thing, exchange rate you have in Google is different from the real exchange rate. Brokers may give you 720 naira. Some brokers may give you 700, 500, something like that. It depends on the broker. So that doesn't really matter for now, but just know that when you deposit your money, it will reflect in United States dollars. All right. Now, when that reflects in United States dollars, you can use that to trade any currency pair at all. Okay, assuming you want to trade US dollars and you have deposited a total sum of $100. All right, let me use $100. All right, let's say you've deposited $100 and you want to risk $20 on this trade. Now, before you open that trade, Australian dollars has $10 out of that $20 you want to risk. Then United States dollars has $10 out of that $20. I'm trying to let you know that there is always a balance. There is always a starting point from everything. All right. There is always a starting point from everything. All right. Now, when you open a position, all right, when you open a trade, I will show you guys how to take a trade. That should be tomorrow. When you open a trade, whether you open a buy or you open a sell, all right. If you open a buy, that means you are trading towards the direction of the Australian dollars. Remember, Australian dollars has the upward movement of the market, while United States dollars has the downward movement of the market. So if market goes up, it moves in favor of the Australian dollars. Then the opposite happens when it goes down because it moves in favor of the United States dollars. All right. So that's it. Now, if you open a buy, what you have just done automatically, all right, what you have done automatically, you have sold the United States dollars you had and added that money to buy Australian dollars. Like what I mean is you have exchanged the United States dollars you had to Australian dollars because after your analysis, you found out that the Australian dollars is going to appreciate in a short time. All right. So when that appreciates, it will double the amount you invested. All right. You will double the amount you risk on that trade. It can double it 3 to 4 times. Like it has no limit. All right. You can make as much as possible on one trade. There is no limit to how much you can make on one trade. All right. So you can choose to set how much you want to make and how much you want to lose if the trade goes against you. We'll talk about that when we get to stop loss and take profit. All right. So that is it. You exchange the United States dollars you had to Australian dollars when you buy. Then when you close that trade, you have exchanged it back to normal. Now the profit you made from keeping that Australian dollars to appreciate before you exchange it back is the profit you made from trading. That's how traders make profit from trading. So we keep exchanging currencies, though we don't do this manually. Once you click a buy, everything is computerized. Once you click a buy, you have exchanged one currency for the other because you know this one you are exchanging it for is going to appreciate in a short time. Then when you exchange everything back to normal, you have the profit made from that. All right. That's it. It's just like you having money now, all right, and you know that money is not going to appreciate or depreciate. It's just going to be where it is. Then you see a good, all right, maybe you see goods that are going to appreciate in a short time. Let's say you had 100,000 naira, and these goods are worth 100,000 naira right now. So instead of you to keep that 100,000, you carry this 100,000, buy these goods and keep them. These goods appreciate, that your 100,000 becomes 200,000, becomes 300,000. You sell out these goods, all right, and get your money back. Now, how much have you made? You have made 200 to 300,000 from that. That is how it works in the forex market. When you exchange this one for this one, it means you have analyzed and you've seen that this one will appreciate while this one will depreciate. Now, when this one appreciates, this one needs to depreciate automatically. Same way with when this one appreciates, this one depreciates automatically. Even though if one depreciates, this one will have to appreciate automatically. That's how it happens too. So that is how profit is made from forex trading. All right. I will give you opportunity to ask question. Use the raise hand feature if you have a question you need to ask, most especially about the parts you did not hear if you had network issue. All right. I can see you, Faith. Faith, you can turn on your mic now. Faith, your mic is on. Faith, are you there? Okay, use the raise hand feature if you have a question you need to ask. Let me give you an opportunity to ask question.
Can you hear me, sir?
Yeah, I can hear you.
Yeah. Sorry, I guess it was my network.
Are you there?
Oh,
Okay, I think Faith, your network is actually bad. John Mark, you can turn on your mic. John, you can turn on your mic now.
Okay, so can you hear me?
Yeah, good evening. Good evening. I can hear you.
Good evening. Sorry. Something is really taking my attention from here. You haven't really talked about it. Now, this place you are putting your console, they are something like I'm seeing, especially this AUD USD. I'm seeing 0.26%. I don't know if you can throw a light on it. Something like that.
Okay, the prices you see at the I get it. All right, let me explain that to you. Now, okay, if you look at this line here that shows the market price, if you look at this line that is showing the current market price, at the end of the line, you will see something like 0.70407. All right, it keeps changing. All right, that is the current exchange rate. Now, remember, two currencies are paid together here, which is AUD, which is Australian dollars, and the United States dollars. All right, USD on this chart. Now, um, the base currency, which is the currency on the left, AUD in this case, the base currency here, all right, is seen, all right, its worth is seen right here. This price you're seeing here is telling you the amount, all right, of the quote currency you need to get one base currency right now. This means that you don't even need up to $1, one United States dollar to get one Australian dollar. Like this price we are seeing here now, let me write it out so you can see it clearly. The price we have here is 0.70423. All right. Now, what this is telling us is that we need this, all right, 0.70423 United States dollars to get one Australian dollar. This is like the exchange rate. This is the active exchange rate right now. All right. It will keep changing. Now, for you to know that AUD has upward movement on the market, which is going to make it appreciate if it makes more money. All right. For you to know that AUD has the upward movement of this market, you will see if market goes up, all right, the amount of US dollars you need to get one Australian dollar will increase. But if it comes down, the amount you need to get one Australian dollar will decrease. All right. That's how it is. Guys, I think we're having a lot of network issues tonight. By tomorrow, I will go over these things again so that you can understand. All right. Okay. John, have I been able to answer your question? I think that was your question. Okay, Faith is there again. Faith, you can turn on your mic now. Faith, are you there? Okay, let me give the opportunity to Edu.
Yeah, can you hear me now?
Yeah, I can hear you.
So you said when depositing in our trading account, you deposit in there.
Yeah, when you deposit your Naira, it reflects in United States dollars.
United States dollars. So
Yeah,
you pick
you can actually choose the account-based currency, whether you want United States dollars, whether you want pounds or Australian dollars. We have a lot of currencies there, but the one I use actually is the United States dollars because it helps me um, just know how much I'm making easily. Is that clear?
hello. Yeah, it's clear. But you use for comparing the both currencies together. So what I wanted to ask is how do we know which of the currency, like which of them to pick before trading it. Like which one is going up, which one is coming down.
Okay, like how do we know when which one will be weak and which one will be strong? Is that the question?
Yes, because I according to what you told us, you said the US dollar, like you bought US dollar of $100, you got amount of $100. When switching it to Australian dollar, let's say you change $10, it means the money we were buying before, that's what you are switching to the Australian dollar. So if you go down, that means you lost, and if it goes up, you are making profits.
Okay, I'm struggling to hear you clearly, but I think I'm getting your point. Your question is, how do we know when which of them will appreciate and which one of them will depreciate so that we know which one to exchange to which one? I think that's your question, right?
Yes, sir. Yes. Yes.
Oh, okay. We have a lot of ways of knowing that. This is where trading analysis comes in. We have fundamental analysis where you analyze using the news, knowing what is happening in the country and all of that. Then we have technical analysis. I'm going to teach you all that. If I mention things now, you may not understand. We have the retailer strategy that you can use to predict the next move of the market. We have the smart money concept. If you check the course outline, you will see that I wrote there how to actually know when to buy and sell using retailers and the ultimate smart money concept. So that class is coming. All right. This is me showing you what you are about to trade. I'm not showing you how to trade yet. In fact, there is how to trade and how to make profit from trading. So this is actually how to trade, not how to make money from trading just yet. So when we get there, I'll teach you all that. Don't worry.
Mhm.
Okay. Edu, you can turn on your mic now. Edu, you can turn on your mic.
Very sir.
Good evening to you.
You said that this current market price now, this 0.700410 is the amount of dollar you need so you can buy Australian dollars now.
Yeah.
What about the amount of Australian dollar you need so you can sell it and buy, you can sell it for the USD?
Okay. Like what I'm saying is that this is the exchange rate now. If you want to exchange the United States dollars you have to Australian dollars, you don't need up to $1 to get. Okay, it's like the United States dollars and Nigerian naira. If you check the current exchange rate now, you will know you don't need up to $1 to get a Nigerian naira. You even need up to 700 Nigerian naira to get one Australian dollars. Why this is happening like this is because why you see this 0.70422 is because United States dollars is worth more than the Australian dollars. One United States dollars is bigger than one Australian dollars. That's what it
Okay.
is. So this is the current exchange rate.
Okay, so I'm not new to this class, yeah, but you helped me out in opening my hot forex broker.
When we
Then I
get there, I'll show
mistakenly
you how
logged
to
out.
open accounts. I said that
No,
already. So don't worry about that.
I've opened an account already. Just that I mistakenly logged myself out from my MT4. Like to log in back now is not issue. I don't know whether there's a process to do forgetting password or something like that.
You can reset your password. If you have an idea, you can actually log into your trading account on their websites, reset your password, log in again to MT4. That shouldn't be a problem.
Okay, I no problem, sir.
It's all right.
Thank you.
Okay, let me give opportunity lastly to Jamil. Jamil, you can turn on your mic now. Jamil Yusuf, you can turn on your mic. Are you there?
Yes, sir. Are you hearing me, sir?
Yeah, I can hear you.
My question is that about the news, sir. About the news.
About what?
Yes, news, sir. News.
Okay, about the news.
Yes, sir. This afternoon, I saw GPPU at the percent. The actual one is lower than the previous. Is lower than the previous one. So I enter for the trade, but it's later against. But I don't know the reason why.
I'm struggling to hear you, Jamil.
Hello, sir.
Yeah.
Uh, I enter for a trade, so I go to news factory, Forex factory. So I saw a news, but I want to enter for a news for the trade. But I saw the actual and the previous one, but the previous one is lower than the actual. Are you hearing me, sir?
Yeah, I can hear you.
So I entered for the trade, but later the trade went against me. I don't know the reason why.
I think what you're talking about right now is an analysis which has to do with interpreting the news. That's the question you're asking right now. And I'm not sure if we've gotten there just yet. All right. We've not gotten to analysis yet. Like I said, I will teach you fundamental and technical analysis. You don't need to worry. If I go into Forex Factory now, not like I don't have an answer to your question. If I go to Forex Factory now, like what I said was, I have an answer to your question, but if I go into Forex Factory now to explain that to you, it will just be for you alone because most people here will not understand. All right, so that's why we have to take a step at a time. If you've had experience before and maybe this class is too simple, you can actually just hold. When we get to pro class, if you follow the course outline, you will see we have a whole lot we need to do on these beginners first before we get to pro level. All right, so let's try and follow the course outline. All right,
Thank you, sir.
let's follow the course outline. It will help us. All right, so I think that will be all, guys. That will be all. Tonight we had a terrible experience with network and voice breaking, but don't worry, guys. By tomorrow, I will go through things we talked about tonight, so that if you did not get it, if maybe it was cracking, network issue, or anything, you can get it tomorrow. All right. So I'll see you guys in class tomorrow. Don't miss because we'll talk about what we talked about tonight tomorrow. All right. So good night, guys. See you tomorrow.